Inflation acts as a silent thief that erodes your purchasing power over time. A burger costing $2 in 2000 now costs nearly $6, not because the quality improved, but because your currency lost value. To build wealth, you must understand the four primary drivers of this phenomenon. Demand pull inflation occurs when high demand for limited goods drives prices up. Cost push inflation happens when rising production costs force companies to increase prices to protect profits. Built-in inflation creates a cycle where workers demand higher wages for rising living costs, causing businesses to raise prices further. Finally, an excessive money supply devalues currency when money grows faster than the production of goods and services. Central banks and governments manage these forces through monetary and fiscal policy. Central banks adjust interest rates to control borrowing. They raise rates to make money expensive and reduce the supply when inflation climbs too high. Governments use fiscal policy by adjusting taxes and spending to influence market activity. While a small inflation rate of 2% to 3% encourages growth, extreme hyperinflation can destroy a family's legacy. You cannot rely on a standard savings account for protection. If your bank pays 1% interest while inflation sits at 2%, you lose 1% of your wealth every year. To win the war against inflation, you must move your capital into productive assets. Gold serves as a traditional hedge due to its limited supply, but high-growth assets like stocks, real estate, and cryptocurrency historically offer the yields necessary to expand your real wealth. Your goal is to ensure your return on investment consistently outpaces the rate of monetary expansion. Stop storing long-term wealth in cash and start acquiring assets that capture the growth of the global economy. Inflation is a silent thief. Your money buys less every year because the currency itself loses value. Prices rise due to high demand, increased production costs, and excessive money printing. If your savings account interest is lower than the inflation rate, you are losing wealth daily. To protect your legacy, move capital into productive assets. Gold, stocks, and real estate capture economic growth and outpace monetary expansion. A standard bank account is a losing strategy in a world of devaluing currency. Stop saving cash. Start acquiring assets that grow.